Hi everyone, I hope you're all doing well. As always, if you can smash that like button, that'd be absolutely amazing. And it's a sit down video today because I'm going to be going through a few things, showing a few graphs, and we're going to do a comparison of Wetherspoons to City Pub Group and see which one is the better stock. So what I'm showing you right now is actually available on the patrons group, which is in the description below, and I posted that earlier this week when we kind of knew that there was going to be the pubs opening again. A few people were looking for some pub stocks to invest in, so I compared these two, which were two big players in the area, and we'll go through them and see which one is the better investment at the moment. So the checklist is: how do I make money? Is the share price going to increase? Why will it increase? So is that going to be because of dividends, dividend increase? Is it going to be revenue growth? When you're comparing stocks, it's really important that you compare apples to apples, not apples to oranges. So you're not having growth stocks against dividend plays or value plays. You want to be getting companies that are quite similar, and these companies are quite similar, which is really good to compare with. When you're looking at a stock, you want to be seeing what does the stock chart say, see if it's a discount, is a good price to be going in right now. As always, read the earnings report because there's some details on there that's really important of how the company's going to be doing. And also have a look at number 5, see what the media is saying. You know, sometimes there's some really useful stories out there that avoided getting put on, like the earnings report, because it's negative for the company, but the media are reporting it. Something like a bribery, they'll keep off the earnings report, but there'll be a lot of news articles about it. So check what the media is saying about these companies. And I'll be honest, I did check what the media said about these two companies, and there wasn't many news stories out there about these two companies. So yeah, they're quite small and not talked about stocks, not always in the news. So yeah, I kind of had a look at what was happening with the media side of it, and there wasn't much on these two companies. So the first one's JD Wetherspoon, the next one's City Pub Group, and the ticker symbol is JDW. City Pub Group's ticker symbol is CPC. Market cap of JD Wetherspoons is 1.3 billion, which is like normal for like a UK company. In general, it's quite a small company, but for a UK company, that's kind of average. And then City Pub Group is 108 million, so we can see that they're a smaller company. When we look into JD Wetherspoons, they're kind of like more of a well-known company, pub chain. They're kind of like national. When you look at City Pub Group and the locations, they're actually like more southern based. When we look at the discount of 52-week highs, JD Wetherspoons is currently at 35%. And City Pub Group is at 47%, so City Pub Group gets the point on that one because it's definitely a bigger discount. P ratio is JD at 19, City Pub Group at 36, so JD Wetherspoons gets that one as well as the market cap one earlier on. And then we'll get stuck into the company. So the earnings for this year is set to increase or decrease -3% for Wetherspoons, and City Pub Group is set to decrease by 33%, so JD gets the point on that one. Profit growth, -4% on JD, City Group 29%, City Group get that one. Profit margins is always quite low for these sort of companies, but JD Wetherspoons take it on 3% and City Pub Group have 2%, so it was a bit of a close one. Revenue growth 6% on JD, City Pub Group, their revenue grew 24%, so they had a really strong 2019 to 2020, so they take the point on this one. Now we'll get stuck into the forecast. So on the forecast side of it, JD are not going to make profit this year. City Pub Group, their profit set to jump 60%. Earnings year 2, obviously I'm not going to give the point to them, but it's 430% for JD Wetherspoons. I'm not giving the point to them because it's always, obviously when it's in earnings, it's not been profitable, and then it goes to profit. The percentage increase is absolutely stupid because you're going from a negative to a profit. So I'm not going to give them the point even though it's higher. I'm going to give it to City Pub Group, who are expected to grow 128%. Year 3, 74% for Wetherspoons, 18% for City Pub Group, so Wetherspoons get that one. Revenue, year 1 goes to JD Wetherspoons, and year 2 and year 3 that goes to City Pub Group. And overall, analyst price target and see what analysts are saying. And at the moment, JD Wetherspoons has the better increase on share price according to analysts, so JD Wetherspoons get the point for that one. On the dividend, there's no yields for both of them because they both cancel the dividend. Payout ratio, same again, there's no dividend, so the payout ratio, we can't count that one. We'll get into balance sheet. The cash on hand for JD Wetherspoons is 47 million. City Pub Group, theirs is 2 million, so obviously there's a lot more cash on JD. Debt is 900 million, and on City Pub Group is 32 million, so City Pub Group take the point on that one. And debt to equity, 286% for JD Wetherspoons, which is certainly a very high debt to equity. City Pub Group is 40%, so definitely there's a big difference in the balance sheets here, and City Pub Group take the point on this one. The next one is the insiders buy-in, and we do this over the last 3 months period, and there was 365,000 shares bought in Wetherspoons, 390,000 bought in City Pub Group, so they take the point on the insiders. and diverse revenue. Both of them kind of just rely on the pub chains, so I have to keep that one a tie and give them both a point on that one. The next three kind of go down to my opinion. So obviously the greater growth. I think that City Pub Group have the greater growth going forward because of the smaller company size, and they're currently opening a lot more pubs, and for them, like opening 4 brand new pubs will increase the revenue absolutely huge because there's less locations. Something like JD, if they open 4 pubs, their revenue obviously isn't going to shoot up, and obviously they're a more established company, a pub chain, so there's not as much expansion availability for them compared to like City Pub Group. So for me, because they're small, they've got a lot more growth to go out there. The next one, great management, kind of goes down to my opinion, but I think for me, I think the balance sheet's a lot cleaner, and I think the chairman, which is Tim Martin, for me, is quite a bit of a political guy, and I think he gets too involved in politics for me. He's always on Question Time, and like he's back on again. It's absolutely crazy how much he goes on that show. Even on like the income statement, the annual report, it was like getting really political on like the annual report, and it was like, you know, kind of leave it out and not post that. And the next is the bigger moat, and because they're both pub chains, I'm going to have to call that one equal on that one, so they both get a point for that one. So at the end, JD Wetherspoons came out with 10 points and City Pub Group came out with 14 points. Now at the bottom I've put some positives and some negatives of each company. So the positives for Wetherspoons is that it plans to open more pubs. It also owns the Lloyd's brand, which is kind of like a bit more of a nightclubby kind of thing compared to like JD. Also, it's on a big massive discount, and also it's got a proven track record over previous years of increasing that profit and revenue. So this company's kind of been there and done that before. Positives and negatives, or positives for the City Pub Group is that there's a lot more room to grow with it being a smaller company. Even though the balance sheet doesn't have much cash, it's actually raised it, and it's not on this here, so it only raised it about a month ago, and it kind of like released some more shares, and it raised I think 15 million I think from there. So it does have a lot of cash on there. So it is kind of a healthy balance sheet now with a lot of cash, and also it has a lower debt to equity ratio as well. And also there's more insiders actually buying inside the company as well compared to something like the JD Wetherspoons. Now the negatives about JD Wetherspoons is that, like I say, I think in my opinion the management team is a bit too political, and I've also seen like things saying like people wanting to boycott Wetherspoons because of how political they are, and instead of just like keeping the neck in a little bit, they're always coming out with statements and going on Question Time. So I think management kind of need to calm that down a little bit. I think the balance sheet, there's obviously a lot of debt on that balance sheet, a big debt to ratio kind of going on that balance sheet as well. A reputation, I think there's like that reputation as well of like, personally I love JD Wetherspoons because of the breakfast being like £5 and you get like a free drink with it. It's absolutely amazing, but there's that reputation now that it's like kind of like a cheap place to go, but I don't mind it. I'm just saying from other people's point of view, you know, they're a little bit snobbish over like Wetherspoons, and also because of how expanded it is, there's also limited room of where they can open new locations as well. Negatives of City Pub Group is there's not a lot of cash. I think there's got enough cash to like run to about September time, but then if it isn't kind of like make a profit, then it probably have to go raise more cash, so that's something to be really careful of. Obviously it's a smaller market cap, so it's going to be a little bit more volatile, and also it's a small moat. I mean it has like the pub side, and it likes buying venues that have beer gardens and also meeting rooms that it can let out, but still it's all under one roof, so it can easily get affected quite a bit because of it having a small moat on the company. So overall, I rate Wetherspoons a C grade, and I also rate City Group a B grade. I think it's got a bit more potential than Wetherspoons, bit better management, a lot better growth. So I think that's why I've gone for City Pub Group over Wetherspoons overall. And in my kind of opinion, I would be more tempted by City Pub Group. I was actually going to buy it, and then I realised it wasn't on Trading 2 and 2. It was on DeGiro. So it kind of like went up after that as well, so I was like, oh, maybe I'll wait on this one. But if it was a dip, I might be tempted to buy City Pub Group. It's not a bad little company. It's not top of my list, but if it's at cheap prices where it's at kind of like right now on this sort of discount, it might be a decent opportunity. So for you guys that are looking into like pub groups, these are two stocks that you might be looking at, and I would say that City Pub Group is probably the better one out of the two companies. And that's the video today, guys, talking about two pub stocks. I hope you enjoyed the video. If you want to get this sheet that I'm using, go to my Patreon's page in the description below. Like, subscribe, I'll see you on the next video.